Hey guys, my name is JC Rangel, Executive Director with Experior Financial, and today we're going to break down the Experior opportunity. Experior is an IMO or an MGA, Insurance Marketing Organization in the US is what IMO stands for, and Managing General Agency in Canada. Experior was founded in Canada in 2014. It was actually the first Canadian-born IMO to expand and establish headquarters in the USA. The Canadian head office is located in Ontario, Canada, and the USA headquarters is in Buffalo, New York. So first and foremost, Experior is partnered with all of the top insurance companies in America. Companies like Ethos, National Life Group, AIG, and Transamerica, to name a few. And what we do for our clients is that we give them the power of choice. You see, we don't believe in a one-size-fits-all because there's no such thing. Some people need final expense, some people need living benefits, some people need permanent insurance, and other people need to roll over their 401k into something that's safer for retirement. And here's the scary part. We sit down with people every week who think they're covered, but when we ask them, well, what do you actually have in place? They actually have no idea. And that's where we come in. We educate them and we do it for free. I recently had a customer tell me that somebody was charging them $700 just to talk. I said, we don't do that. We get paid by the insurance company only if we are able to find the right product that actually helps you. That means that our interests are aligned with yours. Let's look at these numbers, for instance. This slide changed everything for me. 75% of adults will have at least one major chronic disease. 40% will get cancer in their lifetime. And every 40 seconds, someone in the US has a stroke. However, this is where we step in. Let me show you how. Ladies and gentlemen, this is a part that most people never hear about. Old school life insurance only pays you when you're gone. Modern life insurance with living benefits is true life insurance that you can use while you are alive. Here's how it works. If you're diagnosed with a terminal illness and given 24 months or less to live, you can access a large portion of your death benefit right now. Generally speaking, you could access between 50% and 90% of your policy in one lump sum. So on a $500,000 policy, that's between $250,000 and $450,000 that you'd have while you are still alive for treatment, for bills, or for time with the family. If you have a chronic or critical illness and can't work, many of our policies also let you take out money on a monthly basis. Think of it like a paycheck from your policy. Now, depending on the policy and illness, that's typically around 2% of the death benefit per month that goes to you. On that same $500,000 policy, that's roughly $10,000 per month to replace your income while you recover. So the bottom line is that you do not have to die to use your life insurance anymore. You bought it to protect your family, and living benefits means that it protects you too. Ladies and gentlemen, truly I tell you, living benefits is the number one thing that got me interested in this industry years ago. This here is our client, Terry. She's also one of our agents. And in 2020, Terry was diagnosed with cancer. Now, because she had living benefits, she got a check for $247,000 while she was still fighting. The good news, she beat it. But unfortunately, in 2025, 5 years later, the cancer came back. But because she kept her policy, she got a second check for $386,000. That's over $630,000 total that she received while she was still alive. And yes, by the way, it's all tax-free. You see, Terry didn't have to die for her family to be protected. Her life insurance protected her while she needed it the most. That's what living benefits does for a customer. Okay, so now that we've covered how we protect our clients, now let's go ahead and shift to how we help our clients with money and tax-free retirement. And that, ladies and gentlemen, starts with the rules of money. First up is the rule of 72. That's a formula that tells you how fast your money doubles. You take this magical number, 72, and you divide it by your rate of return. At 1%, how fast will your money double? Well, 1 divides into 72 times. Hence, your money will double every 72 years. At a 4% interest, 4 divides into 72 18 times. Your money will double in 18 years. And at 12%, 12 divides into 72 every 6 years. Every 6 years, your money will double. Now, I think that we can all agree that in school, we were never taught the rules of money. You know, if they had Wealth 101 and Wealth 102, I would have taken both classes, but they didn't have them. And frankly, this is why by 23, most people are drowning in credit card debt because, ladies and gentlemen, money has rules and we were never taught those rules. And you either know the rules of the game or you don't. Now, I think that we can all agree that if you don't know the rules of any game, you're likely going to lose at said game, right? So when we sit with families, we teach 3 rules. Rule number one, as we talked about earlier, is a rule of 72. This is the power of compound interest. Most people get paid, pay their bills, cover life's expenses, and then whatever is left sits in their bank account earning nothing, maybe 1% interest. Meanwhile, the bank takes your money and puts it to work for them. They earn 5%, 8%, 12% on your money. I often ask my clients, so why don't you do what the bank is doing? Instead of earning 1%, why not put your money where you can earn 7%, 9%, 12% with compound interest? Now, what most people say to me is, JC, how? Nobody ever taught me that. Exactly. Most people don't know how. So let's look at a 1% interest and how many years it'll take for your money. We covered this earlier. Let's say you're age 29 and you have $10,000 that you put in an account that's earning you 1% per year. That means that it's going to take 72 years. So by the age of 101, your $10,000 turned into $20,000. Congratulations. But let's say if we go to 4%, it doubles every 18 years. At age 29, once again, you deposit $10,000 into that account. By 47, it doubled. And by 65, it doubled again. So now you have $40,000 by the age of 65 if you're earning 4% per year compound interest. Now let's look at 6%. It's only 2% more, but you start at 29. By 65, you have $80,000. Now let's go to double digits, 12%. You start with $10,000. By 35, 6 years later, it doubles. By 41, 6 years later, it doubles again. And so on and so forth. By the age of 65, your $10,000 turned into $640,000. 6 years later, at 71, you've got $1.2 million. What a significant difference. And by the way, that is a one-time $10,000. That is assuming you never contributed any additional money to that. The second rule we teach our customers is how money works. There is fixed, variable, and indexed. Fixed is safe, but low with no gains. But also you get no losses. Now with variable, that has a risk. When the market goes up, you're doing great. However, when the market drops, ladies and gentlemen, you drop right with it. Let's say in the year 2000, you put $100,000 in the S&P. In 2002, the dot-com bubble hit you for minus 22%. You lost 22%. Then you start to gain. You start to recover. Once again, in 2008, the financial crisis hits. You got hit for another 38%. You lost 38%. Now it took you 5 years to get back to even. Then once again, in 2020, the COVID crash, you dropped another 34% in 33 days. The bottom line is that over an 18-year period of time, there was 3 crashes. Your average return was only 1.85 per year. Now, adjusted for inflation, you actually lost 13% of your buying power. Ladies and gentlemen, that's variable. When the market drops, you drop with it. Now let's go ahead and look at an index strategy. You see, an index strategy gives you the upside market with downside protection. That means that when the market goes up, you go up with the market. But when the market crashes, and it will, you do not lose a penny. Now, you're not going to gain anything either, but instead of losing 30%, you get zero. Zero gain, zero loss, and at that point, zero is your hero. The third rule we teach our customers is taxes. Now, it doesn't really matter how much money we make. What matters is how much money we keep. Now, there are only 3 ways that you are taxed. You are either taxed now, taxed later, or taxed never. And if you are wondering which one of these strategies we teach our clients and help them implement, it's a tax never strategy. That includes executive bonus plans, cash accumulation life insurance policies, municipal bonds, and Roth IRAs. We teach families how to position their money so the IRS is not their partner in retirement. Okay, now let's talk about the timing of the opportunity. Have you ever heard of the baby boomers? Of course you have, right? Today, boomers are thinking about one thing, retirement. As a matter of fact, every 7 seconds, a boomer turns 65. 10,000 baby boomers a day to be exact. And they need to move their money. Now, you don't leave your 401k at an old job. That's like leaving your bank account with your ex, right? You don't do that. You roll it over. Now, that number that's being rolled over is $60 trillion that is changing hands right now. Ladies and gentlemen, we are in the middle of the largest wealth transfer in U.S. history. And here's why this matters right now. This is a $109 trillion industry, bigger than real estate and retail combined. Baby boomers control most of it. Once again, 10,000 of them are retiring on a daily basis, and they need to move their 401k plans for retirement. That's where we come in. They're looking for products like annuities, guaranteed income that they can't outlive, and protection for market drops and tax-deferred growth. Final expense to cover funeral costs so families aren't stuck with the big bill. Look, we just talked about a $109 trillion industry and $60 trillion changing hands. But here's a reality for most Americans today. 69% have less than $1,000 saved. Debt is crushing them. 68% say that they'll have to work longer, and 36% believe that they will never retire. Here's what scares me. If the primary wage earner lost their paycheck, 44% of families hit serious financial trouble within 6 months, and 28% wouldn't even make it 30 days. This is why what we do matters so much. This here's from a real client, a real credit card statement. This client was drowning in minimum payments. Month to month, barely surviving. His statement said that if you keep paying the minimum, it's going to take 54 years to get out of that debt. If you pay $427 per month, you'll be debt-free in 3 years and save $30,000. Too many people live here, ladies and gentlemen. So here's how we help our clients with that credit card debt. We've partnered with a company called Mediator. And what Mediator does is that it negotiates with your creditors to cut the debt to a lower monthly payment. No loans, no bankruptcy. Now, here's the best part. You don't need a license to refer this particular service and start earning right away. Let me show you an example of a real client. This client had $30,000 in debt with a 29% interest. His payment was $1,390 per month. At that rate, 30 years of payments. Imagine that stress. So Mediator steps in, the payment drops to $453 per month, and the debt is gone in 4 years. The client saves $900 per month. So if you know of any people that may be drowning in credit card debt, you could help them now. But here's a trap that most people fall into. Most people get that $900 back and they go get a new car or they buy some shoes because nobody really educated them on a plan like this. So what we do is we build a plan for them. We show them how to find the money in some cases through the debt they have. And then we show them smarter things to do with that money. You see, what we teach our customers is that the goal isn't just to be debt-free, but rather to also build wealth. Now, a financial needs analysis is what we run for our customers. On every family, we run this because we collect data with this information. We look at their income. We figure out what they really need. The first thing we look for is cash flow. We show them how to manage their income better. We even show them how to earn additional income in some cases. And you'll learn more about this shortly. The second thing we do for our clients is proper protection. We show them how to protect against loss of income and how to protect their family assets. The third thing we do is an emergency fund. We help them build a 3 to 6 month savings for emergencies. The fourth thing is debt management, and that's where Mediator comes in. We simply, once again, refer the clients to the pros so they could cut their debt in half. 5 is wealth building. Instead of earning 1 or 2% or 0% most of the time at the bank, we show them vehicles that can earn them that 6%, that 7%, or even that double digits, 10 or 12% or more. Now, the sixth step in the financial needs analysis is a preserving of wealth. This is where living trust comes in. This is where wills come in. Let's look at the example of Prince, the singer. You see, Prince did not have a living trust. The result of that, his estate went into probate for 7 years. His family was fighting in court. That's terrible. Nobody wants that. So we help people avoid that by keeping the money that you work so hard for and leaving a legacy. Now, one of the best parts about a part-time or a full-time career with us is that we have more than enough trainings. On Mondays, we meet with the brand new people. Now, throughout the week, we teach on everything from final expense, term insurance, IUL, whole life, how to run illustrations, how to build a quote for a client, all of the things that you need to be successful and to learn in this business. We've got more than enough trainings. Not only that, we also have an incredible university that teaches our new agents everything they need to learn from A to Z. Now, for those of you that want to do more than just sell, but you also want to build an agency, Wednesdays we have live company overviews like this. We also train you on how to promote your business, how to acquire customers, how to market yourself on social media, etc. All of this, by the way, is available in Spanish and in English. Okay, now let's get into how we get paid. We have 5 streams of income. The first one is your personal income. This is where we show you how to personally sell. Now, once you get set up and once you get certified, we actually show you our lead program so you could help us with closing those leads as well. But what if you want to do more than just sell? What if you want to be an agency owner? We have that opportunity as well. You could be a broker, kind of like a real estate broker, but in this case, it's an agency owner. Then we have the expansion opportunity as well. Ladies and gentlemen, you can build an organization in 50 states plus Canada and Puerto Rico. The next one is bonuses. The company and the carriers have some incredible bonuses that they pay simply for doing what we're supposed to do, which is to help and bless customers. And the last part is the reoccurring revenue or the residual income. I don't know if you realize, but every time you help a customer get a policy, you actually get paid a reoccurring residual income on that customer for the life of that policy. And very often the life of that policy is until the day that they pass away. Okay, so now let's get into the money. Let's get into the personal income side of the business. Okay, so as you get started with us, you start off as a financial associate. As a financial associate, you are on a 70% contract, and I'm going to break that down for you here today. So let's say in this example, you are helping one person per month with a protection strategy. That person is paying $100 per month, $1,200 per year in premium. Okay, you would earn 70% of that yearly premium. 70% of the $1,200 equals an $840 commission to you. So you imagine you protected somebody with a life insurance policy, a basic life insurance policy with living benefits. Now they've got $300,000, $500,000, $1 million coverage plus living benefits. You did something great for that person and their family. They're paying $100 per month to protect their family. Your commission as a brand new associate of 70% equals an $840 commission. Now, once you help an average of 4 or 5 people, you get promoted to senior financial associate. Your commission in that scenario is 85%. On that same customer paying $100 per month, your commission is now $1,020 on that same customer. Now, let's switch gears here. What if instead of helping one person, you're helping a family? You're helping a husband and wife. Maybe a husband and wife and a couple of family members. Let's say you help a family and that family is putting away a total of $300 per month. Okay, $300 per month times 12 months equals $3,600 in yearly premium. As a financial associate in that scenario, you earned $2,500 by helping one family per month. $300 per month in premium on average is what they're putting. And as you can see, that $2,500 goes all the way up to $4,300 by you helping one family with protection. I've got a bunch of customers that pay $300 per month to $500 per month to $700 or $800 a month or more. As you can see, the money is pretty lucrative. Once again, let's say instead of helping one family per month, you are helping 4 families per month, 1 family per week. As a brand new financial associate, you're on a 70% contract. You help 1 family per week, putting away an average of $300 per month. Your commissions there are $10,080 per month. Ladies and gentlemen, we've got plenty of people that are doing this on a monthly basis consistently part-time. Now, obviously making this kind of money part-time is not that long before they end up going full-time, right? And as you can see, as a senior financial associate, those numbers go up to $12,000, senior manager, and so on and so forth. What if you want to do more than just help a couple customers? What if you want to build an agency? This is what attracted me. What if I build an agency is what I asked myself. So let's say you've got a couple of people that are helping 1 family per week. You've got a team of 6. You don't have a huge agency. This is not a huge organization, but you got a total of 6 people in your agency helping 1 family per week. Well, your agency override in that scenario is right around $9,000 in overrides before you even generate any personal income. But let's say you went out there and did likewise, and you generated $10,000 in annual premium. As an executive director, your contract level is 115%. That would mean that you earned an extra $11,500 in personal income. When we add those two together, that is $20,500 in monthly income. That's $246,000 per year. Not too shabby. But once again, this is a team of 6. What if you build a bigger team? Now with this slide, I'm not going to get into too much details, but as you promote other agency owners, as you promote other executive directors, you still override those teams. If I get to executive director and I help my buddy Jay get to executive director as well, I will earn a 14% first generation override on his entire organization, even though we are on the same contract level. Okay. If he promotes somebody else to an executive director on his team, that would be my second generation. I would earn a 7% override on that organization. And as you can see, this pays 7 generations deep, and this does not include bonuses. Now let's talk about the legacy program. The fact that you get to own your book of business day one. Now, that should be a given in the industry, even though it's not, but I love that we have that, and we have that in writing. But additionally, not only do we own our book of business, but we also own our own agency. That is a legacy program. Yes, the book of business, my customers pay me a residual income forever, but my agency, what happens if something happens to me? The agents that are selling policies, that agency gets transferred over to my wife and kids, even if they are not licensed. And the next part is becoming a shareholder within Experior. If you're helping build this incredible company, how cool is it that they have the opportunity for you to earn shares in Experior just for doing what you're supposed to be doing, which is building an agency and helping customers. And lastly, strategic equity. What this is, ladies and gentlemen, is that let's say you decide that you want to retire. You decide that you're done working. You build an agency, you're making a passive income, and you want to sell a piece of your business, or you want to sell your business. Experior will actually offer to buy your business from you as well if you decide that you want to retire early or you're just done building. Now, to get started working in this incredible industry, ladies and gentlemen, you do need a state license because this is a regulated industry. And ladies and gentlemen, what does it take to get started with our company? There's no upfront cost. There's no fee to get started. You literally can sign up today, get your back office. Now, 30 days later, you will have to pay a whopping $20 per month. But that is for your back office. That is for your website. That is for your CRM, for your university, for all of the training that you need to build your business. You have the Diamond University that teaches you everything from A to Z that you need to learn to build the business here with us at Experior. So whatever it is that you choose to do, ladies and gentlemen, we're here to serve you. Maybe you want to partner with us. You want to build an income. You want leadership and long-term legacy? Great, we're here for it. Maybe you want the financial education. Maybe you want to learn how to be a customer and how to take advantage of some of these things. We can help you with that as well. And maybe you also want to refer us. Maybe you know some people that can benefit from either partnering with us or from the financial education that we provide for our clients. Okay, ladies and gentlemen, at this point, what I want to do is I want to thank you for taking the time to watch this video. And what I would recommend you to do is to also get together with the person that sent you this video. Get your questions answered. Let them know if you want to partner with us or if you want to become a customer. And with that being said, I'll see you at the top or from the top. Take care.